Hi, this is Ian Coleman from Signal Centre. This is this week's video analysis for the dollar index and the FX majors going into the week 1st of July 2019. As always, going to start off with the dollar index. Seeing a move to the upside this morning. We're going to highlight our support and resistance levels, chart formations, and basically what we think or believe is going to happen for this week. So, like I said, we're going to start off with the dollar index. Going to break down some time frames. Now, this is the monthly time frame. Looks like a corrective channel formation. We've got levels up close to the top of the Ishimoku cloud. The top of the cloud was actually 98.40. We made a 98.37 high, and we've moved to the downside. We're now inside the cloud formation. When that happens, we have a tendency to see pretty mixed and volatile trading. If we go to this chart here, we look to have completed a bearish Elliott wave count to the downside. We've broken out of this wedge formation, but again, levels inside the Ishimoku cloud have found some buying interest, and we're just popping to the upside. Now, if we extend this trend line out to the right, then we move our tool along. We've got some reverse trend line resistance located at 96.83 this week. If we go to this chart, then this was the wedge formation. This is the daily chart. So we broke this wedge formation quite aggressively to the downside. The measured move target was actually here, so we did come up short 95.73, and we actually made a low trade of 95.84. Now we've got some bespoke resistance at 96.60 this morning. That's close to a previous swing low. So what was support should become resistance. However, I don't believe that's going to hold. I think we're more likely to break to the upside. But we are looking still in general to sell into dollar rallies this week with the long to medium term bias still bearish. So if we reflect that back onto the FX majors, and we'll start off with euro dollar. So obviously levels close to the 61.8% fib, which was located at 111.80, found some buying interest. But if we notice last week's candle, just a doji style candle, and we are starting to move again to the downside, we still look for the medium term bias to be bullish in euro dollar. The reason being is that we've got this wedge formation. We've broken the wedge formation to the upside. There's no clear indication that this rally's come to an end. We've got some bespoke resistance located at 114.25. We've got the wedge target located at 114.48. However, there is scope for a deeper correction, I believe, this at least the beginning of this week. We've got some support located at 112.82. If we look at the weekly chart, the Marabuzzo level, which is the midpoint from the open and the close, is located very close there. I think about 112.83. So we're looking for that level to hold selling interest, at least at the beginning of this week. Sterling dollar is pretty similar story, really. If we go to the monthly chart, large wedge formation, posted an outside month back in January, keeps the long-term bias bullish. If we go to the weekly chart, we've got a bullish engulfing candle from the low. Again, often indicates the end of a trend and the start of a new upward bias. If we look to the daily chart, then this reverse trendline resistance located here, rallies above it or to it, continue to cap buying interest. However, if we look here, I believe we're going to form a bullish reverse head and shoulders pattern. So this would be the left shoulder, this would be the head, and then coming down to form the right shoulder. Obviously, areas around 26, the figure, have been quite pivotal. If we go to a closer time frame, this is what we're seeing today. We've got the fib levels, 38.2, 50% here, 61.8% and 126.12. We've got trendline resistance or trendline support, sorry, 125.98. We've got bespoke support at 126.34. So although we're looking for the long-term bias still to remain bullish, there is scope for a correction lower to buy into. We're looking to buy cable today at 126.34. We've got to stop at 125.89. We're focusing up here 127.90, which we hope will be the neckline of a bullish reverse head and shoulders pattern. Dollar Swiss, let's look at a few different time frames here. This is the monthly chart. Large wedge formation. We can see that we did break to the downside, but we've not really held on to that breakout. If we go to a shorter time frame, this shows another wedge pattern. So we've had a decent breakout to the downside. We've got reverse trendline resistance at 99.93. That's obviously very close to that psychological one big figure, and we look to that to cap any corrective move to the upside. This formation has a measured move target down here, 91.90. So again, although there's scope for dollar buying, we still expect it to be limited. Today's call, we're close to a DMARC exhaustion count. We've got a previous swing low here, which is 98.53. That was support, now becomes resistance. We've got bespoke resistance at 98.53. Got a 50% pullback level at 98.54. So although we are seeing quite an aggressive move to the upside and we had a gap open overnight, we're looking for rallies to be limited today. 98.53 is our sell trigger. We've got a stop place at 98.83. We've got a target level at 96.60 over the next couple of days. Dollar yen, and again we've seen that gap open. Let's just open up the time frames here. 5-wave count to the upside. An ABCD formation target was completed at 107.37. We spiked below there. We can see that large gap open overnight, obviously with the news coming in from G20. Here we can see the gap. We're really in a bit of a no man's land at the moment. Are we going to form a reverse head and shoulders pattern? So this was a previous swing high. This is a 161.8% fib, and this is our bespoke resistance. So there's potential of a move in either direction today. So if we look to this, and then possibly to the downside, so moving up to the head and shoulders, then coming down to form the right shoulder, and then the next aggressive move to the upside. So at the moment, like I said, we're in no man's land. Gaps have a tendency to be closed. The gap open is located at 107.91. We've got bespoke support at 107.85. So we are looking to buy into dips today. 107.85, looking for a long trade with a stop at 107.55 and a target level at 109.25. Dollar CAD, and again, I don't think we really utilised maybe the intraday calls on this last move to the downside. We did spot the wedge. We did get in on a medium-term call, but we never got a, sort of anything in the way of a decent pullback to get in on the intraday calls, unfortunately. This is an expanding wedge formation. Got a bias to break to the downside. DMARC 13 count often indicates the end of a trend. If we go to the daily chart, this has broken this wedge formation to the downside. The wedge target was 131.12. We've reached this previous swing low, and we're seeing a bounce to the upside. Ignore that indicator there, that's incorrect. If we go to the intraday chart, previous swing low, so again was support, now becomes resistance. We're in what could be seen as an expanding wedge pattern, so it does have a bias to break to the upside. The measured move target is 132.30. However, this was support, becomes resistance. We've got bespoke resistance located today at 131.40. So we are still looking at dollar buying to be capped today. 131.40. Our trigger level 131.75, our stop level, and 130.76 our target level for this intraday trade. We tried to get short of Aussie dollar on a couple of occasions last week, um, although sort of P&L wasn't badly affected by the 9 o'clock close, which is our close. We didn't really get on side. What we have seen is a move from the daily Ishimoku cloud. Let's just put it on here. So we've had that move to the upside. We've actually had a gap open that's been closed, virtually pit perfect to the top of the Ishimoku cloud. When we get these flat lines on the Ishimoku cloud, it's often an attraction for price action. Something that you should know, especially on a thick cloud cover. So basically what we're seeing now is quite an aggressive move to the downside. We've already closed the gap. I think we will form a bullish reverse head and shoulders pattern eventually. So we might move down to 69.17. However, 1, 2, where's the third and fourth wave? Could be here, but definitely a 5-wave completion to the upside. So expect trading to remain mixed and volatile. What I'm looking for here is an A, B, C, D formation. So 1, 2, and then 3 to complete. So today we're actually buying dips close to 69.62. We've got a stop place at 69.22, and we've got a target level at 70.30. Euro sterling, expanding wedge pattern, has an eventual bias to break to the downside. However, there's no clear indication yet that that rally is coming to an end. We've got trendline support at 89.06. We've got bespoke support at 89.15. So today we're looking at buying at 89.15. Got a stop at 88.91. And we've got a target level at 89.75. So reasonable risk reward, just over 2.3 against the one risk. The target level being this previous swing high. Euro sterling, and this bucks the trend a little bit. An expanding wedge pattern, posted a bullish outside candle on the daily chart. We've had a decent move to the upside. We've got a gap open, which is now just being closed, and we're starting to see just a mild correction higher. Now we've got some bespoke resistance. Let's just have a look. Bespoke resistance located at 123.36, and then we've got this cloud cover at 123.50. So we're looking for rallies to be limited. It might only be counter trend, but again we might see a reasonable move to the downside. With regards to sort of risk reward, then the bias or the good trade setup, as far as I'm concerned this morning, is to sell into rallies. So the long-term bias is still bullish, but we're looking for a counter trend trade to the downside. Looking to sell at 123.50. Got a stop place at 123.90. Got a target level at 121.50. Hopefully over the next couple of days. Okay, guys, I hope you found that informative. We'll be back again soon with some more analysis. Many thanks.